Hello, welcome to our classes. I am Dr. K.K. Misra. This video tutorial is on multiple choice questions on financial management. This is part 5. Now come to the questions. Question number 1. Kanji company had sales last year of rupees 265 million, including cash sales of rupees 25 million. If its average collection period was 36 days, its ending accounts receivable balance is closest to, assume as 365 days in a year. So if you calculate, you will find it to be 23.7 million rupees. So correct option is B. 2. A company can improve its debt to total assets ratio by doing which of the following? The correct option is D. Sell common stock. 3. Which of the following statements in general is correct? A. Low receivables turnover is desirable. B. The lower the total debt to equity ratio, the lower the financial risk of a firm. C. An increase in net profit margin with no change in sales or assets means a poor ROI. Or D. The higher the tax rate of a firm, the lower the interest coverage ratio. Here correct option is B. The lower the total debt to equity ratio, the lower the financial risk for a firm. 4. Debt to total assets ratio is 0.4. What is its debt to equity ratio? If you calculate, you will find it to be C, 0.667. 5. A firm's operating cycle is equal to its inventory turnover in days. Here correct option is A, plus its receivable turnover in days, that is RTD. 6. If the following are balance sheets changes rupees 5005, decrease in accounts receivable rupees 7000, decrease in cash rupees 12012, decrease in notes payable rupees 10001, increase in accounts payable, a use of funds would be the correct option is D, rupees 12012, decrease in notes payable. 7. Use of funds include A oblique and a decrease in cash, B. Increase in liability, C. Increase in fixed assets, or D. Tax refund. Correct option is C. Increase in fixed assets. 8. Which of the following would be included in a cash estimation oblique budget? A. Depreciation charges, B. Dividends, C. Goodwill, D. Patent amortization. Correct option is B. Dividend. 9. Which of the following is not a cash outflow for the firm? A. Depreciation, B. Dividends, C. Interest payments, D. Taxes. Correct option is A. Depreciation. 10. Which of the following would be considered as application of funds? A. A decrease in accounts receivable, B. A decrease in cash, C. An increase in account payable, D. An increase in cash. Correct option is D. An increase in cash. 11. The estimated benefits from a project are expressed as cash flows instead of income inflows because here correct option is B. It is cash and not accounting income that is central to the firm's capital budgeting decision. 12. All of the following influence capital budgeting cash flows. A. Accelerated depreciation, B. Salvage value, C. Tax rate changes, D. Method of project financing used. Correct option is D. Method of project financing used. 13. A capital investment is one that the correct option is A. Has the prospect of long-term benefits. 14. A profitability index of 0.85 for a project means that the correct option is C. The project returns 85 cents in present value for each current dollar invested. 15. Which of the following statements is correct? So here correct option is C. If the PI of a project is less than 1, its NPV should be less than 0. 16. A project's profitability index is equal to the ratio of a project's future cash flows to the project's A. Present value, initial cash outlay, B. Net present value, initial cash outlay, C. Present value, depreciable basis, or D. Net present value, depreciable basis. The correct option is A. Present value, initial cash outlay. 17. The discount rate at which two projects have identical is referred to as Fisher's rate of intersection. A. Present values, B. net present values, C. IRRs or D. profitability indexes. Correct option is B. Net present values. 18. Two mutually exclusive investment proposals have scale differences. Ranking these projects on the basis of IRR, NPV or PI methods give contradictory results. Correct option is C. It may be. 19. Preferred shareholders claims on assets and income of a firm come those of creditors, those of common shareholders. Correct option is B. After but before. 20. You are considering two mutually exclusive investment proposals, Project A and Project B. B's expected value of net present value is $1,000 less than that for A, and A has less dispersion. On the basis of risk and return, you say that here correct option is A. Project A dominates Project B. 21. In finance, working capital means the same thing as here correct option is C. Correct option is in fact D. Current assets minus current liabilities. Correct option is D. 22. To increase a given present value, the discount rate should be here correct option is B. Downward. 23. Which of the following would be consistent with a more aggressive approach to financing working capital? Here correct option is D. Financing some long-term needs with short-term funds. 24. In deciding the appropriate level of current assets for the firm, management is confronted with A. A trade-off between profitability and risk. B. A trade-off between liquidity and marketability. C. A trade-off between equity and debt. Or D. A trade-off between short-term versus long-term borrowings. Correct option is A. A trade-off between profitability and risk. 25. Which asset liability combination would most likely result in the firms having the greatest risk of technical insolvency? So here correct option is C. Reducing current assets, increasing current liabilities and reducing long-term debt. 26. Which of the following illustrates the use of a hedging or matching approach to financing? Say A. Short-term assets financed with long-term liabilities. B. Permanent working capital financed with long-term liabilities. C. Short-term assets financed with equity. Or D. All assets financed with 50% equity and 50% long-term debt mixture. So here correct option is B. Permanent working capital financed with long-term liability. 27. Varies inversely with profitability. A. Liquidity. B. Risk. C. Financing. D. Liabilities. Here correct option is A. Liquidity. 28. Spontaneous financing includes A. Accounts receivable. B. Accounts payable. C. Short-term loans. Or D. A line of credit. The correct option is B. Accounts payable. 29. Permanent working capital varies with the seasonal needs. B. Includes fixed assets. C. Is the amount of current assets required to meet firm's long-term minus needs. D. Includes accounts receivable. Correct option is C. Is the amount of current assets required to meet a firm's long-term minus needs. 30. Financing a long-lived asset with short-term financing would be A. An example of moderate risk, moderate potential profitability asset financing. B. An example of low risk, that is low potential profitability asset financing. Or C. An example of high risk, high potential profitability asset financing. Or D. An example of the hedging approach to financing. The correct option is C. An example of high risk, high potential profitability asset financing. So this is all about this video tutorial. I hope that you have liked it, and if you have liked it, please do not forget to subscribe my YouTube channel R Classes and do press the bell button so that you keep on getting notifications of my further uploads, and do forward it to many in your connect those who are needy now and in the future. Thank you. Please like, share and subscribe. Thank you very much. Have a nice time. Best of luck.